whether it's going to chop around or not, we don't know. But right now, price fell back down below the swing of the previous day, and that's what we've been watching. So I'm thinking to myself, don't take a long right now, even if there's an opportunity. See right here on the daily chart, it's swinging below again. These pivots looking like it wants to go lower. The hourly chart created a fair value gap right here. After it broke this pivot, price just went up to test it. Okay. And we're getting that look on the 30-minute. Let's see what the 15 looks like. It didn't quite go up to the fair value gap before reversing, but the only time charts it looked a little bullish was the 5 and the 1 minute. You can't really base your directional bias on the 5 and the 1 minute, not when everything else is looking short. I really wanted to take this long right here, and it might work. It might work. It might do something, right? And that's my problem, is that I don't mind taking a small little profit on a scalping opportunity in the direction that the overall direction's not really going. And that might be hurting me. That could be hurting my, my win results. And it may be that I just need to get better at scalping. I just need to get better. My entries, when I enter late, that hurts. If I notice that when I enter in late, that's what really causes the problem. If I would have got in right here, I'd already be profitable. I'd already be breaking even. There's no doubt in my mind. That's how I trade. Where did it bounce? Right off this unicorn right here. Right off this pivot. Right in the fair value gap. Right? So whether it comes crashing down or not almost is irrelevant to the scalping process. Because you can scalp for a tiny profit or break even on the 5 minute and 1 minute, even if the overall, if you're looking for a big move, if you only trade to get big moves, then you have to go with the higher time charts. You have to go with the 4 hour and looking at what it wants to do, and the daily and all that. That's important. But if you're only looking for a quick scalp, then the 5 minute and the 1 minute and even a 15, 30 seconds. If you can see, look at this, look at that. It came right down into the middle of that fair value gap and bounced off this pivot right here. And, it's already up. It's already up. Let's see. 10 points already on a tiny little 30-second, 15-second timer. Now it's back up over the highs of the daily swing, right? And it did on the 15-second, you can clearly see what looks like, anyway, a breaker block formation right here. And what did it do? It created a fair value gap here. And what did it do? It tested it before going up over the top. So on these very low time frames, we can see scalping opportunities that are counter trend to the longer term time frames that may be more bearish. So the 60-minute, let's look at the 15-minute. Even the 15-minute is not giving us a reason to go long at all. There's no reason to go long on this at all. Now, we have one bounce with a fair value gap right here. And that is the only positive bullish thing that's happened on the 15-minute. And I can see why people say that's not enough. That's not enough to go, long. But if we were looking for scalps only and we saw this, like when it displaced up, when it came up here, we see a 15-minute fair value gap. We go down to the 5-minute chart. We see a fair value gap on the 5-minute chart. We see one on the 1-minute chart. And we see something on the 30-second, 15-second chart. We see a breaker block. That's 4 time charts in a row that are kind of giving us an idea that all agree, 15, 5, 1, and 30-second, that say there's probably some kind of a little bounce in here somewhere, even if you're bearish on the 60-minute chart, even if you're bearish on the daily bias, right? So I think that that's something to consider. What kind of a trader am I And I apparently like to scalp more than I like the big runs because I'm constantly taking trades. But a lot of times I'll take trades just on the 1 minute chart with no confirmation on the 15. At least on the 15-minute, we have a fair value gap created. Yeah, at least we have that 5 minute agreeing, the 15-minute agreeing. Now, if I were to see something on the 1 minute, I am not just blindly taking something on the 1 minute. And I appreciate that. That's something that I want to make sure that there's multiple charts agreeing before I simply take something on the 1 minute chart. So I hope I get that through my head on this. Okay, something that makes sense to me then is if the higher time charts are going in a certain direction, bearish or bullish, in this case, bearish. And then I can take a quick scalp on the lower time charts, even though the higher time charts are bearish in this case. What's interesting is that when the lower time charts roll around and conform to the higher time charts, then we no longer are looking to scalp in the counter trend direction. But like right here, what time chart is this? This is the 1 minute. And we were talking about taking the 1 minute for a scalp to the long side, which would have worked beautifully off this fair value gap right here. Beautifully. Right? And what happens though is that when it hits a fair value gap going bearish and it starts to turn, then we know that the higher time charts are taking effect. And these short scalping trades should be avoided at that point. So the lower time charts are starting to roll and agree with the higher time charts. That's what we're looking for. All right, this is an example of fair value gaps being respected and disrespected. I'm just putting it all together right now. On the higher time charts, fair value gap right here on the 60-minute, it came up into it and it's being respected, right? Now, the 30, you can see that same thing. The fair value gap's being respected to the downside. Okay, 15-minute, let's look at it. There's a fair value gap to the long side that we took a small scalp in. That's being disrespected in the bigger picture though, right? So that's the 15-minute chart. 5-minute chart, we see this is the scalp where we entered on this fair value gap on the long side, just a quick scalp up. And as soon as it hits these pivots, we reverse, take profits, and reverse and go short because this is the entrance for a short fair value gap that's being respected. All right, these fair value gaps for the scalp to the long side, just this little move here, are now being disrespected, right? So you can see the respect and the disrespect of these fair value gaps, which is very interesting for me to learn. Here in the 1-minute chart, you can see even more clearly the fair value gap that was created on the unicorn, the tip of this breaker. When it came down, this was the long. But you can't go longer, you can't go any higher in your profit target than the fair value gap for the higher time chart. When the 1 minute starts to roll here, you know that it's lining up with the higher time charts and you need to stop taking bullish scalps on it, right? So, you know, here's the fair value gap that we were waiting, and it probably could have, might have been able to do some kind of scalp on this if you wanted to counter trend trade on it. But let's see how far down it came. It's very tricky. This probably wouldn't have been a good idea. It's always better to go with the higher time charts. Let me just say it is. I mean, when we go counter trend like this, it's risky. The losses are more likely, profits are less, and it's just trickier. It takes a lot of skill to do that, and I'm really not there yet. But there are valid reasons why to take a scalp. I mean, it's just more dangerous. That's all there is to it. But when you do see an opportunity to take a fair value gap on a unicorn trade, even if it's counter trend and it's likely to give you something, not much, but something, I don't see why not try it, depending on the kind of trader your temperament is with trading. But I just wanted to point that out in this video, the fair value gaps that are being respected versus the fair value gaps that are being disrespected.